It's been a tough month for the market's top 500 companies, but that's not a surprise. September has always been notoriously bad for markets. The S&P 500 has fallen 4.2%, and it's on track to be a second straight losing month. For more on this, Yahoo Finance reporter Jared Blickery, who's been tracking all of this for us. Hey, Jared.
Hey, Rochelle. Not only is September typically the worst month for stocks, but we are entering, this is the first day of the last week of September, which is the worst week of the year for stocks. A couple of different ways to slice this and dice this. Let's go to the Wi-Fi Interactive, where I'm plotting the sector action. This is the year to date, and you can see the mega cap sectors with communication services and tech. Those are doing the best, but on a month to date basis, lots of red there. We can see energy is the only green spot, XLE in the upper left. And then in the lower right, we got real estate that's very interest rate sensitive, along with tech, also interest rate sensitive. But then we have the cyclical sector of industrials, and we have consumer discretionary materials. So pretty broad swath of sectors here in the red. But we want to think about what's coming down the pike. I've been slicing and dicing the numbers myself, and so is Ryan Dietrich over at Carson Group. This is the S&P 500 over the last 6 months. And you can see we are just now dipping below this potential neckline right here. But here are the stats that I wanted to throw out at you. The last time the S&P 500 was down at least 1% in both August and September, the way it is this year. October was up 8% in 2022, 8.3% in 15, and 10.8% in 2011. Higher 9 of the past 10 times going back to the late 1950s. As bad as things feel, do not lose faith just yet. And I think a lot of the strength that we're expecting to the end of the year also comes from the fact that we had a tremendous run-up in the first 7 months of the year. That was January through July. And that just portends greater strength in the year, despite some hiccups that we typically have in the months of September and October when we see volatility heading up. So I want to show you what volatility has been doing. This is the VIX, and I'm going to put a 6-month chart. And you can see we've launched off of this support level down here. That's in the 13s. And we are right back up at where we have peaked before. So this doesn't mean that stocks can't go lower if the VIX stays where it is, but probably seen a little bit of a less steep decline. And if the VIX does spike higher to, let's say, 21 or 22, some of these higher points that we've seen earlier in the year, then we would expect more downside from there. But I just want to close. When we're talking about seasonality, we can look at the S&P 500 or the Russell 2000. I'm looking at the VIX right now, and we are in the midst of the worst 2-week period for the VIX. That is, higher VIX means more fear in the market, hence worse. This ends in the first week of October. So until then, Rochelle, I think things could be a little bit dicey. But again, we have all this strength from the beginning of the year that tends to portend strength towards the end of the year as well.
So it could be a light at the end of the tunnel versus perhaps another train coming down the track. I guess we'll have to see. Appreciate you as always. Yahoo Finance's Jared Blickery. Thanks so much.